What is up, guys? It's your boy Evan. Now, as you may know, the one big beautiful bill has passed through the House, but that doesn't mean that it's law yet. If you look right here, you could actually see that it still has to go through the Senate, which is the other chamber of Congress. It has to be signed by the president, which it absolutely will, and then it'll become law. But in the meantime, there's a lot of misinformation, disinformation, call it whatever you want, about this big beautiful bill. And I thought, that seems worthy of covering. Let's go into it. Let's actually read the bill and see what it says, so this way you know for sure what it is that is being voted on. And therefore, the ones that don't want it, you know what they're voting against. And you can make the decision for yourself if you want to support it or if you're against it, right? But before we get into that, I would really appreciate it if you could like, comment, subscribe, share with a friend. If they be going on about the big beautiful bill and you feel like they don't know what they're talking about, show them this video and you can say these are all the different tax reliefs that we're gonna get following this bill if it passes. So because of how big this bill is, I am not going to be able to cover everything in it, obviously. However, I did think it would at least be good to cover the tax relief portions, because I feel like that impacts the most amount of people right off rip, right? Right here, you see part 2, additional tax relief for American families and workers. And I'm gonna list off some of these sections, right? First thing right off the back, no tax on tips. Second section, no tax on overtime. Third section, enhanced deduction for seniors. Now keep in mind, Trump's promise on his campaign was that there was going to be no tax on Social Security, and unfortunately, this bill does not have that. He has 2 of the 3 exemptions that he promised, but maybe somewhere down the road, we'll be able to get that no tax for Social Security. Old people deserve it. No tax on car loan interest. That's going to help out a lot of people. Enhancement of employer-provided child care credit. I think a lot of mothers would really appreciate that. Extension and enhancement of paid family and medical leave credit. That's always nice. Enhancement of adoption credit. I really like this one because one of the biggest barriers for a lot of people that adopt is the financial barrier. It's more so that you have people that want to be parents more than anything in this world, but they can't afford it. They're priced out. And moving forward, recognizing of Indian tribal governments for the purposes of determining whether a child has special needs for purposes of adoption credit. That I don't know too much about that. I'm gonna have to probably read into that a little more. Tax credit for contributions of individuals to scholarship granting organizations. Okay, get some scholarships out, make it a little easier for those nonprofits and whatnot. Additional elementary, secondary, and homeschool expenses treated as qualified higher education expenses for the purposes of 529 accounts. Not sure what a 529 is. I'll have to look into that further. Certain post-secondary credentialing expenses treated as qualified higher education expenses for purposes of 529 accounts. Reinstatement of partial deduction for charitable contributions of individuals who do not elect to itemize. Exclusion for certain employer payment of student loans under educational assistance programs made permanent and adjusted for inflation. See, I like this, right? Because what this one is talking about is that when you have businesses that want to pay off a portion of a student's debt in return to have them work for X amount of years in a contract, that is the market itself relieving the debt problem. And it makes a lot of these jobs more appetizing to new students who may not be totally satisfied with the pay, right? Because that is an issue where a lot of entry level jobs, they aren't paying the amount that a student would need to live comfortably and pay their student loan. But if the business is promising to pay some of that student loan and being credited by the government for it, that makes that lower pay more livable for the student worker. Exclusion of rules for treatment of certain disaster-related personal casualty losses. MAGA accounts. MAGA accounts contribution pilot program. Wonder what a MAGA account is. It looks like we're gonna see. So we went over the table of contents. Now let's actually go into some of the sections and see what they actually say. Now, mind you, I'm not going to go through every single page. There's a lot of reading to do. But if that's something you'd like to see, please be sure to comment and I will read through everything because I'm here to serve you guys. Okay, so here we are, no tax on tips, the actual section, right? This is the actual meat and potatoes of this section, and it will say exactly what they mean by no tax on tips. So this deduction is allowed. Part 7 of subchapter B of chapter 1 is amended by redesignating section 224 as section 225 and by inserting after section 223 the following new section. That was a whole lot of stuff just to say this is section 224. In general, there should be allowed as a deduction an amount equal to the qualified tips received during the taxable year that are included on statements furnished to the individual pursuant to the section 6041D3, 6041AE3, 6050WF2, 6051A18, or reported by the taxpayer on Form 4137 or successor. So that was a very convoluted way of saying when you receive a receipt and it has how much you were tipped, that is the qualified amount. It is furnished to you in some way or form that is documented. And even if you don't have that, you fill it out on a 4137. So they're still keeping track of your tips, right? But the only difference is you're not being taxed for it. In fact, it comes off as a tax deduction. So if you paid too much taxes throughout the year because of them incorrectly allotting you what your deduction should be, you may get a tax return. Tips received in course of trade or business. In the case of qualified tips received by an individual during any taxable year in the course of any trade or business of such individual, such qualified tips shall be taken into account under subsection A only to the extent that the gross receipts of the taxpayer from such trade or business for such taxable year, including such qualified tips, exceeds the sum of cost of goods sold that are allocatable to such receipts, plus other expenses, losses, or deductions other than the deduction allowed under this section, which are properly allocatable to such receipts. So, your cost of goods sold is what it actually costs to make this product ready to be sold. So let's say I'm selling grills, right? And I have special sports logos on the side of the grill. Well, the grill itself, getting it manufactured, let's just say it costs $30. And the sticker that I'm going to be putting into the grill to give it the design, that costs me $1. And the labor of actually getting the sticker onto the grill in a permanent way, let's say that's $10, right? So all in all, it cost me 30 plus 1 plus 10, it's $41. That is your cost of goods sold. But you could be selling it for 80, you could be selling it for 100, you could be selling it for 200. But your cost of goods sold is $41. And it says that only to the extent that the gross receipts of the taxpayer from such trade or business for such taxable year exceeds the sum of the cost of goods sold. So this is more specifically towards people that run their own business. So this specific section is talking about tips that are from people that run their own business, right? Because those are the sort of people that would also be dealing with the cost of goods sold. In most cases, if you're, say, a waitress or you're a bartender and you're not yourself dealing with the cost of goods sold, like there's someone above you that handles that, this doesn't apply to you. Not that the tips aren't deductible, but this specific requirement that it exceeds the cost of goods sold does not apply to you. Section C, qualified tips. For purposes of this section, 1. In general, the term qualified tip means any cash tip received by an individual in an occupation which traditionally and customarily receives tips on or before December 31st, 2024, as provided by the secretary. It's interesting that they word it this way, because what this means is now that tips can't be taxed, they don't want a bunch of businesses to suddenly start tipping. So in other words, right, you're a cashier at Walmart. That is considered a job that you normally would not see a tip. If people suddenly started tipping there, those would not be considered tax deductible tips or qualified tips as they word it. Exclusions. Such term shall not include any amount received by an individual unless such amount is paid voluntarily without any consequence in the event of non-payment, is not of the subject of negotiation, and is determined by the payer. So in other words, if you are charging a mandatory gratuity, that is not a qualified tip. If you are providing something less in your service without the tip, that's not a qualified tip. It has to be purely on the voluntary basis of the customer who received an equal service with or without providing that tip. A trade or business in the course of which the individual receives such amount is not a specified service, trade, or business. So any tips that are for anything other than what you are paying for is not considered a qualified tip, right? So if I'm buying a lawnmower from someone, right, and all they do is sell lawnmowers, I pay the person, we have a really good talk, and then I tip them because I think they're a nice person, that's not a qualified tip. This one's a little bit more confusing, but essentially it's that your tip has to be correlated to the service that was provided. Such an individual is not a highly compensated employee. So that part says if you are a highly compensated employee. Let's find out what highly compensated employee means. All right, so I pulled it up for you. A highly compensated employee is someone that, under the ownership test, if he or she is a 5% owner at any time of the current plan year, also known as the determination year, or the 12-month period immediately preceding the determination year, also known as the look-back year. So most employees are not going to be 5% owners of any place they work at. So now that we've gone over the no tax on tips, let's talk about the no tax on overtime. So qualified overtime compensation in general, there shall be allowed as a deduction an amount equal to the qualified overtime compensation received during the taxable year. In general, for purposes of this section, the term qualified overtime compensation means overtime compensation paid to an individual required under Section 7 of the Fair Labor Standards Act of 1938. So this is your typical overtime, right? So nothing's changed about the definition of overtime. That there is an excess of regular rate as used in such section at which such individual is employed. So that is as clear day as it gets. If it is overtime, it is not taxed. That is as clear shut as it gets. I want you to keep in mind, a lot of people, their criticisms of this was that by not taxing the overtime, the company was going to be disincentivized to give overtime because they're going to be paying all the taxes on their own. That is not the case. The taxes don't roll over back into the business. They don't absorb the other half of it. Exclusions. Such term shall not include any qualified tip as defined in section 224C or any amount received by an individual during a taxable year if such individual is a highly compensated employee. As we mentioned earlier, that is someone that owns 5% during the current year or for at least 12 months of the look-back year. Social Security number is required for this. In general, no deduction shall be allowed under this section unless the taxpayer includes on the return of tax for the taxable year. So I mean, basic shit, right? Include your Social Security number on your taxes. Who would have thought? If the individual is married, the Social Security number of such individual's spouse. Okay, yeah, so it's nothing new, right? It's just repeating a lot of the same that we know. It's that if you're filing your taxes, you got to include your social security number. You got to include your spouse's social security number. You got to include your kids' social security number or anyone else that you're claiming. Section E, termination. No deduction shall be allowed under this section for any taxable year beginning after December 31st, 2028. Okay, so that's when this ends, right? So 2028, the bill will no longer be in effect. Now, there's two reasons for this. One is that with any new tax revision, you do want to put a deadline on it because you need to kind of see if this works. You don't want to set a tax provision in place permanently until you've at least tested it. You want to test the waters with it. Now, 2028, what else happens in that year? It's a midterm election. So, I think that this is strategically placed as well. I think people are going to see how great these tax revisions are, and they're not going to want to lose them. And it'll put the Democrats in a very tough spot because people are going to be enjoying all this extra money that they're making, and the Democrats are going to want to get rid of it, but that's going to adversely affect them. So we may see Democrats pull back, or they're going to lose seats. That is my prediction. So that is the no tax on tips, no tax on qualified overtime. Let's get into the enhanced deductions for seniors. So as I mentioned, this isn't one of his campaign promises. This is like a kind of a halfway to there, but this isn't quite what he promised. He promised no more tax on Social Security. That is not what's in this bill. But what is in this bill is enhanced deduction for seniors. Bonus additional amount for seniors in general in the case of any taxable year beginning after December 31st, 2024 and before January 1st, 2029. In other words, the time that this bill is allowed, it does expire the 31st of December 2028. The dollar amount in effect under paragraph 1 shall be increased by $4,000. Limitation based on modified adjustment gross income to the case of any taxpayer for any taxable year. $4,000 amount in subparagraph A shall be reduced, but not below zero, by 4% of so much of the taxpayer's a modified adjustment gross income as exceeds $75,000 or $150,000 in the case of a joint return. In other words, you're married and filing. Modified adjusted gross income. For purposes of this paragraph, the term modified adjusted gross income means the adjusted gross income of the taxpayer for the taxable year increased by any amount excluded from the gross income under section 911, 931, or 933. And then it's repeating a lot of the same information from the last paragraph, including, hey, keep your social security number on your filing, have your spouse's social security number, have your kids, all the basic stuff that we already know about filing taxes. So the real meat and potatoes is all right here. The dollar amount in effect under paragraph 1 shall be increased by $4,000. So elderly people are going to have about $4,000 more in tax credit to make things a little easier when filing. They're going to pay less taxes, which I think is great. But this isn't what he promised. He promised no tax on Social Security. I'm praying that we get there. But I think that's where I'm going to go ahead and end it. This is a very bulky, meaty bill, and I would love to dig into this more, but I'm not going to be able to do that all in one video. So hope you find this informative, right? We have no tax on tips, and it goes into distinction of what counts as a qualified tip. In any traditional sense of tipping, it's going to be covered. No tax on qualified overtime. So overtime, as you know it, will be untaxed. And then elderly seniors are going to have enhanced deductions. They're going to have $4,000 more in tax credit, which is great. But it is not what Trump promised. So as a constituent, I'm going to be holding them accountable to that. If I don't see that coming up, I'm going to be pissed. But I'm happy with this. I'm very happy with this. I think this is a step in the right direction. And there's a lot more to be covered in this bill, such as no tax on car loan interest, right? Maybe we get into that next time. But until then, I'm Evan. This is the channel. Be sure to like, comment, and subscribe. I'm out. Peace.